JJ, the CPA here. Hope you're doing well. Big news. Like what? Like mind-blowing a little bit here. So starting 1/1/24, these clean vehicle credits we've been talking about, a couple of videos I'll give you a link to that go through the details, but the $7,500 clean vehicle credit, the $4,000 used vehicle credit, those are the maxes. You ready for this? When you go to the dealership, you can immediately transfer those to the dealership, which means that you're immediately getting that dollar amount knocked off your purchase price. So when you go in and vehicle's 40 grand, not to you, if it qualifies for that credit and it's new, bada boom, bada bing, now it's 32,500. You got a trade in going against that as well. So you're borrowing less money as well. So how do you know what vehicles qualify? What if you make too much? What does it come into play about your tax liability? Because we know these credits still need to get reported on the income tax return. But that consumer is going to get this benefit immediately. So I'm giving you links to all of this stuff, but let's pop over. I want to show you a few things here. So what we've got that came out today, because the IRS told us about this in early October, but the IRS is telling us today, November 8th, that they mean business in the sense that they now have the energy credit online tool for the dealers to go and register for this. So it has to be from a dealership that is registered. Now, of course, any dealership is going to want to do this because it's obviously going to drive consumers to their dealership. Now, the one thing I want you to keep in mind is that you definitely still want to ensure you are negotiating the sales price. They should not be taking credit for the $7,500. You shouldn't back down from your great negotiating skills going in and buying a vehicle. You should still get the rebates that are available, et cetera, et cetera. Now, the IRS put together pretty nice fact sheet. They go through like almost any kind of question you could come up with. So I'm going to give you a link to that. Now, where do you find this vehicle? So I'm giving you a link to this, fueleconomy.gov. So this is for the new vehicle. And check this out. Right now, you can go, well, what's the time period in which you're buying it? This is in the future. That will be updated. And you go, well, I'd like to see what we're looking at here from this period of time to that period of time. So 22 to 24. And let's say you go, well, I want to know what all the vehicles are. So it's going to list them all. But if you're like, well, I'm really kind of interested in the BMW. Well, you can put in BMW and it immediately updates it. You can break it down to all electric or the plug-in, but it's going to tell you what that credit is. The MSRP limits still stand. All the other requirements still stand. Now, if you want to look up your used vehicle, well, same thing. You just put what period of time you're looking. So let's say 18 through 21, and you're interested in getting a Bentley. Is there a Bentley that qualifies? What? There it is. Oh my gosh. Or a Hyundai or Tesla. So bottom line is you can know what you're dealing with. Now, the reason there's no dollar amounts there is because for the use tax credit, it's up to $4,000, but it does depend on the purchase price, and then no more of $25,000 of the purchase price can be included. So the IRS has provided a lot of guidance on this, as well as U.S. Treasury, which oversees the IRS. So vehicles for new clean vehicles purchased after 23, IRS has a ton of FAQs in here. So I'm going to pop into a few of them real quick. And they also have great information on the used vehicle credit. So you can eat your heart out, so to speak, in terms of getting info on this. But here's a couple of quick things. So we know that with the credit, we are unable to actually realize the credit if somebody makes too much, whether it's used or new. And it's not a refundable credit. What does that mean? Well, when you do it on your tax return, you can only get this credit to the extent of your tax liability. Well, what happens though when you're going to buy a vehicle, you're in January, early part of the year, and you're like, I don't really know what my adjusted gross income is, meaning I'm not sure what I'm going to make this year. And therefore, I certainly don't know what my tax is going to be. And so the IRS has thought about this and pretty generous, if you will, on the one aspect here. So in the FAQ, what if a buyer has insufficient tax liability? No problem. They don't have to pay it back. So it's not subject to any kind of recapture. Also, what if they end up making too much? Meaning they go to the dealership, they get credit for the $7,500. They obviously took advantage of it. But then when they go to do the return, well, shoot, they made too much. Well, you are going to have to then pay it back. Well, what is that dollar amount? So for the new vehicle, that dollar amount of threshold is 300,000 married filing jointly and so on. And then for the used vehicle, that is 150,000 married filing jointly and so on. So again, giving you links on that. So it does still matter about the adjusted gross income. And what the IRS indicates is that if you got too much of a credit because of your income, then you will pay it back. And how will you pay it back? Well, it will be added to your other taxes on that individual return for that tax year. How many transfers can you make in a year? No more than 2 elections. Can you transfer part of it? No. This goes into effect 1/1/24. Now, one of the things I want you to note, though, is that you don't have to transfer this. Now, I don't know why you wouldn't, but the dealership can't coerce you to do it. And then the other thing, though, is for Uber drivers, you're out of luck on this, or what is it, Touareg? No, it's not right. Turo that rents vehicles. So you can't transfer the credit, but also it has to be for personal use. So you can't transfer the credit to somebody if you're going to use that vehicle for business. And you may say, well, how would they know? Well, they're going to know because if you're written off the vehicle, then they know. So what you're looking at here is the transfer on the new vehicle credit can only be if you intend to use the vehicle predominantly for personal use. I'm not seeing any definition of predominantly, so we can get dumb and cute and try and define what that is. I'm sure it's an insignificant percentage that could be used besides personal. So maybe say that's, a small percentage. We don't know exactly what that is. So pretty big deal, because this is kind of a game changer. My son, Cooper, 21, he's looking at getting a Tesla. So if he goes next year, gets a new one, he gets $7,500 off, he's got a trade-in, well, he's definitely borrowing less. What you'd want to do is, if you think you're going to take advantage of these credits and those specific vehicles, you probably want to pick it out soon, get to the dealership soon. Now, again, not in effect until 24, but you might want to get on the list, so to speak, or be on the lot early, because it's definitely going to drive more consumers to want to get these vehicles. So with that being said, great news today. I think overall makes it a heck of a lot easier. Still have to report on the individual return, but I'm loving this. All right. Hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. You have a great one.